Hi there, this is the story of Opendoor. Right now the market cap about 1.5 billion and the stock price has started to go down to $1.98. Maybe you remember my past video when I said that Opendoor will go down. It'll go up a little and then down, and that happened. So again, another of my predictions came true. Now, the most important question is whether right now Opendoor, after they reported their earnings, is still a buy. And the answer you'll find in this box. During this video, I'll open the box and you'll find the answer here. And to understand this answer and tell you exactly when is the right time to invest in this company, you have to look at their fundamentals. First, the revenue for Q2 was quite nice. A small increase, but nice. 1.5 billion. And quarter over quarter, quite a higher increase. Now, another important fact is that their earnings have improved quite a lot for Q2. They reported a small loss of about 29 million. And that's great. Now, the problem is, and the reason why the stock price went down over 10%, is that they offer guidance for Q3 2025. And revenue is expected to be around 800 million. So a decline from 1.5 billion to 800 million, almost half. And their earnings, they expect a loss of 28 million. By the way, this is adjusted EBITDA. So their final earnings, their loss will be higher, even higher than this. They also announced that housing market continue to deteriorate, and this is quite bad. I also said in my last video, higher interest rates, average home prices went up, home sales went down by 2.5% in June. So this was obvious. And the numbers for next quarters will be bad. Now you also have to look at their balance sheet, because if you look at their cash position, right now it has increased to $1.18 billion. Compare this amount to the current market cap of 1.5 billion, close to the market cap. They also have some assets, real estate of about 1.5 billion, and if you do the math, it's higher than $2.6 billion, higher than the current market cap. But you also have to take into account the debt of about 2.1 billion. Because if things get worse, they report a higher decline in the revenue and higher losses, then they might default on their debt. They might sell their assets with a loss. So you have to be very careful here. Now, if you subtract their debt from the real estate plus cash, the net cash position is about 676 million. And this is the moment, your tangible value, when you have the possibility to buy this company and have good return. If you buy when the market cap is below 600 million, you are more likely to make a profit at this company. Right now the market cap is 1.5 billion, so it's still expensive. Why I'm saying this? Because if you look at the revenue over the last 3 years here, it was 5 billion 24, close to 7 billion 23, and 50 billion 2022. When the revenue rebounds, let's say back to 15 billion, and then also are able to report a profit, then the market cap from this level for sure can go up 5x, especially if they report a profit. So the upside can be quite huge only if the revenue rebounds and they report a profit. Now, you also have to look at the worst case scenario, because what if the sales continue to decline? Well, they'll continue to issue more shares, and right now they're about 743 million. In the past, if you look at the number of shares, It has increased from 600 million to 660 and 710. So you also have to be aware of dilution. And another thing, as long as we continue to have high interest rates and also inflation, that will put pressure on the home sales because people can't afford to buy a new house, a new home. High interest rates, high inflation. If prices go up, you have high interest rates, people can't afford to buy a home, and that will affect Opendoor. Now, as I said also in my last video, if interest rates are lowered, they go down by 50%, then this will be quite a huge driver for Opendoor. Yes, you can have a double again from this current market cap. But again, be very careful with this company because you have the risk of dilution. You don't know for sure if they can deliver a profit. And it's better to have a margin of safety. Buy when the market cap gets around 600 million or below. That will be a good entry point. And if you look at the history of their market cap, you can see that it was lower than this number, 600 million. So you may have another opportunity to invest in this company when the valuation is lower and in your advantage. Right now, I still believe that this company is expensive and highly risky. And to open the box, tell you whether this is a great investment, and I hope you understand the answer. The answer is no. Still, Opendoor is not a great investment. As I said, great investment, not average or good investment. Great investment. Because if I compare Opendoor with my businesses from my portfolio, if you go to my profile, please join and choose Titan Investor, you will see there my portfolio. They have far better investment ideas than Opendoor. They deliver you more growth in the future, dividends, buybacks, and of course you also have a margin of safety. So if you want to stop losing money with Opendoor or companies like this and make great profits, go to my profile and please join. And if you have other questions about this company, Opendoor, please let me know in the comments.